And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Wednesday, August 4th, 2021. The market remains in this box. And it does afford me a lot of time where I can take a step back and I can take a look at what I believe is going on and how it is going. One subscriber actually had given me this as a count after I had switched it and placed the 3 here and the 4 here. And he showed me, and I, of course, could not disagree because it is an alternate, that what the market is really doing is so far a double ABC. Now, what still, and I'm leaving this here for right now, but with the understanding that the market may still be involved. So far, the plan is going accordingly, let's say, in that I do believe that the 4 is ended here, unless the market tells me different. But right today, it did not. As we discussed yesterday on the update, that I believed that this was wave 1, we might get a little bit more upside, and we did not. So that ends up being a minute wave 1. And then this would be, if it's, and I don't think it's done yet, a minute wave 2. We had discussed about the wave 2. We had talked about the fact that the C wave could be very destructive, could bring it down. It actually could get all the way down to 43.65, but it can't break because it would then not be a wave 2. As one of the rules clearly states, wave 2 cannot go past the start of wave 1, because then it's not correcting wave 1. So it's very logical. So it can go down and equal it, but it can't surpass it. So far, that rule remains in place. In fact, it held above the hourly 50 all day. And that is next support. And you can see that it did get a little close, got down to 91.25, with this being at 89.50. So it got close, but the buyers were waiting. And then when it zipped up, that just, where are we? Yeah, no, here. When the buyers stepped in, after reaching that level, you can see they took it all the way up to 44.03, brought it back down. So the volatility was a lot higher today. I will add that as well. But this was a good market to trade because they followed the moving averages, and the moves followed Fibonacci, and they followed Elliott. So it was a little bit, it was volatile, where it would drop $5 and go up $3 and then drop, there were those moves today for sure. But they were very tradable. In any case, what I think we may end up getting, if indeed this does come down, I think it will finish wave 2, and then we are just in a blast. And that would be the expectation. I'm going to open this back up again. So give me one quick second here. I can leave it there. Because 1, 2, what's next? 3, what do we know? The third wave is usually the longest and the strongest out of waves 1, 3, and 5. Well, here's wave 1. Dynamic, wonderful, wonderful rallies, hot, tradable rallies. We get a wave 2, what comes next? It'll be a third. Whether this, I believe, still has a little bit more downside to go. And well, maybe it gets down to 43.85-ish. Again, it can get all the way here. So it actually has to break there to change the count. But in the meantime, and this is something else I want to make sure I add, even if it does start heading for that level, you still need to trade it. So I'm going to interject a little bit of trading things here. So when you're trading this, number one, it's like, yes, you've got your position in mind where you believe this market should go, or what the capabilities are and what the probabilities are, and you get a clear understanding it could come all the way down here. Well, if it starts to do it, and maybe it does go past 65. The point is that you have to continue to trade it. You're looking for support there. The count does not allow it to go below 65, but if it does, it changes the count. That's it. It doesn't tell the market, whoops, you're breaking a rule, turn around. So you must continue to trade it. So it's a fine line, that keeping that in mind, and then moving to a position of, well, what comes next? Well, you will already have that in mind if you're putting your Fibonacci retracements and extensions on your charts. And so now I will go back out to the hourly, because I want to just discuss real quickly, if indeed it comes back down to here, then this is really more than likely a triple ABC. And common, I mean, this is consolidation. This is not, you know, everybody's worried, everybody's wondering, everybody's waiting. And so here's something else. You have to understand that on all sides, it's like a coil, and it's building and it's building and it's building, both buy and sell, because they both got their marks, right? Breaks below here, you sell. Breaks above here, you buy. So the coils are set. And if the market goes there, that pressure will spring it. It'll spring high. Now it's like winding up one, a toy, and you let it go. Boom. So both sides, because look how long it's been in the box now, a week and a half. So there's a lot of pent up, and it is turning into that the wait is for Friday's employment situation numbers. And why they're wrapping it around there. But if you saw today, there was that little pre-look at it. There was an advance, I'm not sure, remember what it was called, but it wasn't the actual number. It was just like the forecast. And the bonds went from being up 23 or almost a full point to being down half a point. And then closing up almost a quarter of a point. So that's volatility in the bonds that we normally don't see. So there's a lot of pent up energy coming in and out of this market at the moment. So it is producing higher volatility, and it'll go quicker, it'll go steeper, or it'll rise higher. So that's that energy that's building. So you have to be careful. So this is another thing. You have to adjust your risk profile, because there are going to be times when your position may be telling you that it's okay to buy or sell, and it may be, but you have to also look at, if you're going to have to expand your risk, it's like if you're trading a one lot, how much extra do you have to add? Are you going to, your stop is going to be if you're down $100 on the trade? And in this case, because of the volatility, the increase in the volatility, it moves freer, down $1, up $1, down $1, up, down $2, up $3. So it swings around. So there are opportunities to work in and out of either side of your position. But you just have to be able to put the risk profile and be able to trade inside there. And if that's not in your forte at the moment, then you really have to stand aside, because the markets will chew you apart. You could have your larger picture, and then you might want to put on a swing trade. And even if you put on the swing trade, same thing. What's your risk profile? What can you take, and what are you willing to add into that to get the move that you're looking for? So protracted, larger moves, more volatile moves, you're going to have to expand your risk or not trade. And particularly if you're a swing trader, because it's zipping, zipping, zipping in both directions. And if you're getting into the money and your trade is doing well, then you get to make another choice. I always believe work a trailing stop, and then I start using, if it's really going your way, it's going to, the 4 and the 8 are going to lead. They're going to lead it down, and the market will likely get ahead of them, but they're going to continue to lead it down, and that's what you use as your stop, because this thing could swing, and you just use your 4, and it'll walk it down. If it's going to continue and you're getting that big move, your moving averages will track it for you and let you know where to get out, because you just keep your stop there, it'll take you out. Just let the 4 guide it. Okay, tomorrow I believe that we should still be able to hold, and this will be a wave 2, and this, we will get that 3 of 3. And then this, I'll put the 1, the 2 in, but right now I'm leaving this open. Even if it's going to be an A and a B and a C, the C, I wouldn't be looking for it to really start to break. If it's a 3, I would be looking for it to start breaking above 44.22. Next stop, 44.41, then 44.65. So we do have resistance all the way up until we get, until we get a little bit of a cluster. Not a lot, it's just 2. But there is sort of a cluster building between 44.88 to 45.07 up to really 45.21. There's a little bit of a cluster of resistance in there that it would need to get through to prove that it indeed has much higher aspirations. So but for right now, the market is having a little bit of trouble getting itself above 44.13, I'm going to call it. And then again, then it's going to have to get above 19 or 20, and then it's got to get above 22. And every time it gets close, you can see the coil, the seller's coil, starts to unwind a little bit. And whatever you want to call it, impatience, jumping the gun, whatever. You'll see it. And then what will have to happen is if it's going to break, those buyers are going to have to outweigh the sellers because they're going to have to absorb it and keep moving. And of course, this can happen because to keep it moving, they have to be willing to be buying uncharted waters. And in many cases, in the component stocks, they're moving in uncharted waters. But in the ones where they're not, the rise in, say, for example, Amazon, getting itself back to 3,400, 3,500, 3,600 can be quite the challenge. And I have to push and push and push because remember, it's a much more expensive stock. But if that happens, it's going to create a larger gap up in the indexes because of the weighting. So yeah, these things can happen. And when they get in groups, like there's 500 stocks in the S&P, it can happen. But it also can gang up on the downside as well. Again, coil. The longer we spend doing this, I will say the longer we stay here, the more violent the resolution is going to be. And by violent, I mean, it's going to go in one direction or the other, but it's going to be violent. It's going to be like, don't get in the way type violent. So that's what I'm waiting for. And it might be Friday. Downside, I think it'll be limited, then we should start on the upside. But remember, all other factors remain in the market. So we may not get that resolution until Friday. But we'll know before the open. That part's for sure. And in any case, continue to trade using moving averages, trade what's in front of you. Take those little tidbits that I gave today on risk, and you may have to expand your risk profile in order to trade a more volatile market. But I'm just kind of getting you ready because it's going to happen either way. And you certainly don't want to get wiped out when it does, because those are the opportunities to make big money. So that's where I'm going to leave it, folks. The next update will be tomorrow, Thursday, August 5th.